Today is Thursday, February 16th, and I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. I got back into S and Snap on the dip a little bit today, very small. Watch as those markets continue to advance. I'm a little nervous about new longs right now, which we can talk about. All right, so we closed here down solidly. The market's down, S&P's down 1.4%, the NASDAQ's down 2%, the Russell's down a percentage point. So, yeah, we got hit pretty hard, which is exactly what I thought was going to happen. And the execution of it was so difficult. I came in this morning with kind of more short conviction than I do typically, especially given what the market technicals look like. I usually don't like to go counter what the market technicals look like. And the thought process I laid out in the morning meeting today was that PPI number coming in hot. I was really concerned that that was going to be it for this market. It's just been one thing after the next. I've been saying it all week. The market has held up so incredibly well. SPY's here still within this bullish consolidation. And today's a weaker day with this upside tail, but we didn't lose support. We're still within this bullish consolidation. But look at the dollar move. The UUP here has bounced over a dollar. It's bounced from 27.20. Sorry, not over a dollar, but about a dollar. It's bounced from 27.20 to about 28.20 over the course of this month, and the market has absolutely held in like a champion. That is the complete opposite of what we have really seen over the course of the last year plus now, where for a while it seemed like the number one factor that was moving the market was the dollar. Dollar up, market down. So that was a pretty consistent thing, and we've just been defying that. TLT down again today. Treasuries are up. The yield curve inversion is pretty serious. Perhaps even more important to me than the yield curve inversion is just the Fed and the increase in the terminal rate. I mean, honestly, the market is finally pricing in what I was surprised it wasn't pricing in 2 weeks ago. I was saying 2 weeks ago, based on everything I'm looking at, everything Jerome Powell is saying, everything the Fed is saying, and all the data that we're seeing, everything's looking like higher for longer. And I could not wrap my mind around why the market was pricing in rate cuts at the end of the year. And I couldn't wrap my mind around why the terminal rate was being priced in at 4.9% or whatever it was a couple of weeks ago, when every single Fed member is saying it needs to be higher than that. And now the market caught up. We're pricing in that higher terminal rate. The dollar, caught a pretty big bid. So there's a very big tightening effect going on with this market right now. And the market has just held in like a champion. We got a jobs number that was super hot. Market held in like a champion. We got the CPI that was slightly hot in the year-over-year number, maybe not the end of the world. Market held in like a champion. We get PPI today, and I really thought that was going to kind of be it. And honestly, the intraday today was still super hard. Let's look over at the intraday. So the best trade I probably had in a lot of ways was shorting the Qs very early on when the PPI number hit. I talked about that in the morning meeting. I couldn't believe the price I was able to get. The number just looked like it should be really bearish to me with the market, and I was able to whack the TQQQ with like 20 cents worth of risk, and that paid me really well. I actually wouldn't say really quickly, because it held in longer than it should have, considering that this was an economic number. So not really quickly, but over the course of the next 15 minutes, I was starting to get paid pretty well on that. Market was dribbling lower as we were doing our morning meeting. And because of now this big down move here that gave us the opportunity to be able to get some shorts on, because the reaction seemed like it was super delayed, we ended up opening pretty extended to the downside. So my thought process, I had a bearish thought process today, but it's counter to the technicals, which is always very difficult to do. And honestly, as a general rule, I really think that traders are better off listening to the technicals over listening to what their opinion is. And the technicals in this daily chart are bullish. They are still bullish. Even today's candle is not a good looking candle, but it's just within a consolidation, so it could be very easy to overread. Our big picture, our small picture, our intermediate time frame daily chart is really still very generally bullish, but I had a short thesis on my brain based on the thought process that I've kind of already explained with the broader tightening impulse of this market combined with that PPI number hitting. I've described it as like the straw that can break the camel's back. But you got to be careful off the open shorting when you have a big gap down, right? This is, now we're going from our large time frame technicals and our large time frame thesis to smaller time frame execution. And when you got these big gaps, you got to be patient. You want to let the market catch up. The market can catch up through time or price, right? And this morning it was really looking like we were going to be getting that time correction to lower prices. You know, first bar here for the SPYs is a little bit bullish, but whatever. Second bar, we broke lows and then snapped right back. That doesn't surprise me at all. And again, I still think that the short here on the second bar of the day, if you're shorting through opening lows, is too early. Why is it too early? Because we're the location of the ADMA on the 5. I need this ADMA on the 5 to catch up. If I'm shorting on this second bar of the day with a stop at highs, there's a good probability of getting stopped out. I want this ADMA catch up. So we get this hammer. We don't get great follow through from it. We get sideways price action for the next 15 minutes. The ADMA is finally catching up. We begin to break lower. This is really where we should have gone lower. And I remember talking to you guys, and I was specifically looking at the Qs at that time going, wow, it looks like this market's trying to give a higher low. And you can very clearly see that with the Qs. Qs had relative strength, so whereas the SPYs, whereas the SPYs here mainly went sideways and the ADMA caught up, the Qs were price correcting higher, and then they gave this is a great candle to short verse, by the way. I don't care that the market eventually broke this high. I love this candle for a short. Just purely talking about small time frame technicals. What would make you like this candle less as a short is the fact that the daily chart of the market is still bullish. What can make you like this candle more as a short is the thesis that I described about potentially this market breaking down a little bit. Is DraftKings ripping on that? DraftKings up on its report. So I really like this short, whereas I don't like this first short. It's too early. ADMA hasn't caught up. I really like this second short. And then, to my surprise, this is where I'm expecting us to create a pivot high that leads to lows. I know Josh was saying the same thing. To my surprise, we created a higher low off of it. And then as this candle formed, I was saying, like, are we really getting a higher low? And if this higher low leads to a higher high, you got to be really careful on your shorts. And that's exactly what happened. But then you're like, okay, you know, maybe it's just a 15-minute correction. Maybe we need the 15-minute to catch up. I feel like the true high of this tail on this 5-minute candle here is actually not accurate. But it's more or less a 15-minute correction with a tail here on this 10-20 candle. This is another candle that I really like the idea of shorting versus for pretty much the exact same reasons. Now you've got a 15-minute correction, you got a shooting star, you put that short on, you still have the thesis, though again, the layer of probability that's against you is the fact that the technicals are bullish. And then when we once again broke highs, it's so hard to be shorting this market. We, in my opinion, should not have been able to bounce as well as we did if my thesis was going to be correct. And it was at that point, or it really wasn't even at that point, it was only after we broke the 8:30 a.m. high. We broke the 8:30 a.m. high for the SPYs at 12:30. We broke the 8:30 a.m. high briefly for the Qs a little bit earlier than that, but really also at like 12:30. That's when I was getting stopped out all my shorts. I think, let me timestamp my TQQQ stop out. Yeah, I got stopped out of my TQQQ at the 12:30 candle here. You know, we failed to make any type of lower high. As a matter of fact, the small time frame is making higher highs and higher lows, which is in conjunction with the big time frame. We negated the 8:30 candle for the market. The market has proved my thesis wrong, as far as I'm concerned. I got stopped out of my T-QQs. I didn't lose money in it. You know, I had a game plan. I got a pretty big move in it. I got stopped out of my Tesla. I was short Tesla off of Josh's call out on the bounce. Looking for like an RDR there. I didn't lose money in it. I actually made a little bit of money in it, but I got stopped out of that. And I did take a little bit of a loss in Meta, which is the other one that I shorted today. I was really trying to go in on the short side of the market, kind of based on my thought process, and I just couldn't keep any of it. You know, I'm not upset at all. You know, the market eventually rolled over really hard when Bullard spoke at 3 o'clock, and you know, we ended up pretty much closing at or near lows. SPYs closed at new lows on the day. Qs closed at new lows of the day. IWM not quite there, but IWM is also going to be given an upside daily tail. I can't be upset that I missed the short. I can be a little frustrated by it, but I can't be upset. Why can't I be upset? Because I had a game plan. I followed my game plan. Was able to cover my risk. I was, being an appropriate risk manager when the market proved to me that my idea was wrong. I mean, look at the Russell that I have up right now. The Russell broke yesterday's high. Like, how can you look at the market at 1 o'clock when it's making highs today and it's above yesterday's high and have any conviction that this PPI number means that we need to go lower based on the price action that's actually in front of you? So, you know, it is what it is. The market proved to me that my idea was wrong. I got stopped out of all my shorts, and then the market got smoked when Bullard spoke at about 3 o'clock. That crashed us rapidly all the way down with me having 0 shorts on the books. Luckily, I'm not too heavy on the long side right now because of the move that we've had. And we ended up closing on lows. And, you know, again, it's slightly frustrating, but can I be upset about it? Can I be mad about it? If I had a game plan based on my edge and I followed it and I just got stopped out of all my shorts because the market proved to me based on bullish price action that I was wrong and then went down, I really can't. And it sounds like some of you guys even caught the downdraft at the end of the day. So if you did, congratulations, I did not. And where we are here at the end of the day as we look at the market, we're still stuck in our consolidation range. 405 support, 415 resistance. This is not a good looking candle within that consolidation. You want to be careful not to overread it, but this could be a signal, today's price action, that we're setting up to actually break the support of this consolidation by getting a below 403 for the SPYs. And if that happens, then the small time frame, that's not a real print, then the small time frame bullishness of the daily chart of the market evaporates, and then the next thing that you got to see is if we're able to continue to hold above that big picture downtrend that we've broken above, which obviously you need to have happen if you're bullish. So again, losing 405 would cause us to lose our small time frame bullishness for the market, but losing like 400 I think would be a line in the sand. If you really lose 400, then you got much bigger problems going on with this market, and we're not ready to go, and maybe it just was another bear market rally. But we'll see how all that plays out. My crystal ball doesn't go out that far. Yeah, so that's where we're at. Looks like we got some earnings reports here after the close. We got this DraftKings. DraftKings is up on its report. It's looking broadly like a beat from what I'm seeing out of the corner of my eye. We got DoorDash. DoorDash is up on its report, which is also looking pretty decent out of the corner of my eye. Decent guide. We got AMAT. AMAT looks like it's up small after hours. Redfin. Redfin doesn't look like it's doing too much. Yeah, trading around where it closed. Yeah, so that's that. I guess from other individual names from today, looking at Shopify in the $45 area, it was not an easy trade. You had to be really patient with it. Which the one other thing I can say for myself I did a really good job on was being patient. I wasn't too aggressive too early on any of my shorts. I wasn't too aggressive too early on any longs I wanted to buy. But Shopify there was one of my better ones in the day, though I'm not swinging it for tonight. What else was I looking at? We're looking at Datadog long versus 80 we discussed in the morning meeting. held that 80 pretty perfectly, had an insane upside move, really over exceeding my expectations. That report did not look that great to me. I thought maybe you could get a bounce off 80, but not a move to green. Just for this thing to also roll over hard and end up being kind of gross. Crocs, I think, just gapped up too much. I was looking at 130 for Crocs. Just gapped up too much for me to be able to do anything. Another one that gave a great momentum move, fully retraced it, so it's leaving kind of an upside daily chart. We talked about AMD and NVIDIA as potential shorts today. NVIDIA had gotten downgraded, so you had an inside day and down. That was another really tough trade along with the market. AMD might have been better, but also on the intraday, this AMD, very hard to hold this when it's breaking that opening high. So yeah, the short executions just tend to be really difficult. I was looking at this meta short because of its early relative weakness compared to the Qs and compared to some of the other FANG type stocks. And when the market and the Qs were breaking new highs, this was not. I ended up getting pushed out at the top of this tail was the high print, which eventually broke that high anyway. I was looking at that, ended up being a short trade for me. Tesla, I think I shorted off this like shooting star type candle. Actually, no, it was earlier than that, right? I'm gonna check my executions. Yeah, no, it was off this candle when Josh kind of called out like a potential RDR, and I thought this is when I thought the market was going to fail. Also, I didn't like shorting relative strength, but I thought that the market was going to fail, and this Tesla's extended enough on the daily chart that I thought I could get a move down to maybe 200 or so, and guess where we are here at the end of the day, 200 or so. So yeah, that was just some of the stuff that I was looking at intraday. Nothing really to write home about. This Coursera I traded very heavily at one point for a little trade, just off of like this bounce area here. I still don't know why the stock is down 16% on the day on zero new news that I was able to find. I traded that as just like a day trade a little bit at one point today also that I think made me a few bucks. And besides that, just kind of position management on the other things that I'm involved in. So that's all I got. I am happy to answer any questions that any of you guys have. So feel free to shoot them out. Scrolling up in the VTF to see if I missed anything. Doesn't look like it. Mike L's doing karaoke tonight. I'm going to sing some Tom Petty tonight at karaoke. I love it. I love it. Recorded for us. Anyone have anything for today? Not seen anything on YouTube, not seen anything in the VTF. I'll give it a minute, otherwise I have no problem wrapping up an early one. Nothing? It's rare. Kyle coming in. I went long Roku at the open for earnings breakaway gap. That's going to be a very hard trade. I chose this name over Crocs as I felt the Roku report looked better. Was just wondering if this was the right way to choose which name to focus on right at the open. I guess, for example, if a ticker has a better report but more extension, does the report mean more? I look at the report, but for me the technicals are more important. So I'm definitely looking at all the reports, but the technicals are more important. And I would be very careful buying either of those directly off the open. If you're buying this as a breakaway gap based on the daily chart, you got to be using like at least 67 as your stop loss. And that's my problem. That's why I'm not probably taking this. I mean, I guess the low tick is 68, where you could get $1 risk there. But if you're paying up to $70, I really don't like it. The trade that I prefer would be this inside 5 and up here. That's a pure momentum trade. I still don't love that type of trade. I struggle to buy things that are very extended, and after that second 5-minute bar, you're extending on every time frame. You're extending the 5-minute, the 15-minute, the daily. You're extending on every time frame. So I struggle to buy extension, but that would be the trade that I would prefer. When you have the really big gap, you wait, you're patient. That inside 5 kind of comes in. That's your momentum continuation setup, and you take the inside 5 and up as your execution. That's the way I would do it, and I wouldn't choose necessarily. They were both decent reports. It's very hard to try to choose Roku over Crocs. while I do incorporate fundamentals into my trading, and while I do have longer time frames on a lot of my trades, I'm not, operating a hedge fund where I'm going to be analyzing the one report versus the next for a multi-month hold or something like that on what I want. And for as far as I'm concerned, I was looking at this Crocs before. Crocs gave me no entry. If I'm buying Crocs off the open, I got to give it to 130. I'm not paying up $2 in this thing off of this degree of extension, and then it just accelerates straight up. So there's no entry execution for me on the small time frame chart at all. So I hope that helps. Scott mentioning ACLS. Little thin for me. Little thin for me. I don't really know the name, but the daily chart looks super bullish. I don't have anything else for you besides that. Tesla. Why is Tesla getting smoked after hours right now? For Michael, I had a great day. Left my opinions at the door and followed price. Bitcoin, coin, SI, MSTR. Up and out by 11 a.m. and then shorted the SPYs after 3 p.m. It's the new me, no opinion, just price. I love it. I love it. Personally, I like to combine both. So price should dictate what you do, but I think having a thesis or having an opinion can give you more conviction. If price is lining up with your thesis, those are my best trades. Those are my best trades. If price doesn't line up with my thesis, there's no trade. And if anything, if price doesn't line up with my thesis, or price is the opposite of my thesis, there could still be a trade. But you're better off trading in the opposite of your thesis, right? That's what I was saying earlier. Like, I had a thesis this morning that the market should go down, but the big picture technicals are still to the upside. And even though I was doing shorting today, I usually don't like to do that. I just kind of had a little higher conviction than usual, but I still use the small time frame to kind of manage, my execution and my risk and everything else that I was trying to do there. So, it's just a little feedback on that. All right, well, I guess we'll just wrap it up then. So have a wonderful night, everybody. Thursday night. See y'all tomorrow morning. And that's all she wrote.